Hello traders. So the 80% setup, or the 80-20 rule, this is something that members within the community have been asking for a while, and also someone within the stream yesterday when I was mentioning that this setup was in play. I basically had some people asking me to just create an educational video on this to show the best ways to trade it, really. So yeah, I'd started preparing like a nice little PowerPoint presentation to make this a bit more professional. And yeah, then the market did this. Okay. So I thought, well, I don't know what the market's going to do next. By the time I actually get around to recording this properly, it may be completely different. This may just drop down and not work. But let's show it while there's a nice example here that is just playing out live. So just a little bit of background, really. So the 80% setup has been it is a well-established trading strategy that comes from Forex markets, from legacy markets. And it really just goes off of the basis that a market is always trying to find balance, okay? So when you have a day's trading range, what you often find is that the market will either just remain in that range, it kind of has this acceptance within a certain area that it wants to trade at, or it tries to break out towards the end of the day, or it wants to gap up, for example, on a legacy exchange. And at that point, what you're either going to see, so you can see here how we have this daily open that comes outside of this like highlighted area within the previous day's chart. And at that point, what you will often see is either price will kind of continue onwards and continue in the trend that it's going, or it starts to get acceptance back inside the value area of the previous day. So the value area is the area where the majority of volume had been transacted within that day. Okay, so you can see within this session here, the 24th of June, you can see that we have this colored shaded area. And this basically shows you the area in which the majority of transactions had taken place. So in this case, I use a 68% setting. So this is where 68% of all the price action had occurred during this day. Other people use a 70%, and there's other ways that I will kind of explain the different variations of this strategy that you can use. But this really comes off the theory that if you do gain acceptance back inside the range, there's then an 80% chance that price is going to go back to the low end of the range. Okay, so if price gets acceptance back into value, it will go all the way through back into the lower end of value. So it's just testing this whole range of yesterday. Yeah, so that's just kind of the basis of it, and the reason that, like, the theory behind why this trade is quite a powerful thing that a lot of traders look for. So the way that this can be traded, okay, so there are certain rules and certain kind of conditions that have to be met for this trade to be activated. And that's what makes it such a popular trade, is because it's like these are written in a book kind of thing. It's a very specific set of rules. There are variations on that, but there are a very specific set of rules that you want to be looking for when taking this trade. So I'm going to show you this first of all, which is just based off of a trading view chart. So anyone can do this. What you want to be doing on the trading view chart is just pulling your fixed ranges from each day. So you can use this, you can pull a fixed range tool, you can go to your daily open, and you can just pull that for the day's trading. And this shows you the value areas for that day, okay? So you can see here, I have yesterday's value area on this chart. What happens when this closes is we get this daily open that is outside here of this value area. Okay, so this is rule number one. So what you want to see is a daily open outside of value area. Yep. Let me just make this a little bit bigger so people can see. So this is the first condition that's been met. Then what you want to see, and I'm showing you this on a 30-minute chart because again, this is based off of the theory of market profile, which is always 30-minute timeframes. You need to then see, secondly, 2 candles, so 2x candles, or 2 times 30-minute candles inside previous day value area. Okay, so we then want to see this acceptance to get 2 candle closes within the previous day's value area. And you can see here how we had this one close quite early in the day, immediately came back out. So this had not been triggered at that point. And then what you get is 1, 2. Okay, if you want to be a bit more conservative, then you can look for 2 open and closes. But this, at this stage, this setup here has been activated. So we have had, first of all, the daily open that comes outside of the value area, and then we get this acceptance back inside. So at that point, what this does is it triggers a trade down to value area low. So right now we are at previous day value area high. This triggers a trade to take you down as an ultimate target of value area low. Okay, now the safest way to trade this, and this is again how traditionally you would trade this, would be, so in this example, you would be looking for, say this is the second candle close that you get. So you would take this trade down into the value area low and you would place your stop loss above the day's initial balance. So the initial balance is the first hour of trading that you get within the day. So you can see here, the high of this initial balance, because you're just looking at a couple of candles here, the first hour is up here. So this is where you would place your stop loss. And this eventually is where you would close out of your trade, and that trade is then completed. So that's like the first, the first kind of rule of that. So what it would do is trigger, so acceptance inside previous day value area, trade to, so let's go here, let's just go value area high for this example, trade to previous day value area low. Yep. So here's the example of that. So we did get acceptance inside previous day value area high, and then you can trade it down to previous day value area low. Your stop loss would be high of initial balance. So first hour of trading for that day. Okay. And this is just, again, these are the rules for it. If you wanted to be more conservative and you wanted like a proper invalidation, you could pull that stop loss up to there, but this doesn't really give you a very good trade in that example. If you want to be a little bit more, so this would be kind of the conservative thing, but if you want to be a bit more aggressive and think, okay, if this just comes back out and starts getting closes above, you can also do that. So at the same point as you would place your stop loss here, the other way that you can place a stop loss is you can manually close trade. So close trade if 30-minute close outside of previous day value area. Okay, so if we were to get a candle close on this 30-minute chart that came back up here, for example, you could just manually close out that trade. That is now, you'd now need basically for this to come back inside and to trigger it again and have another attempt at that. But the way I like to do it, like I just said, is to trade this based off of the initial balance. So again, you can see this very clearly on here of this is how it's traded. Now there's another important thing that you would be looking to do. So you see this red line here. This is your previous day point of control. So on your previous day's session, this is the ultimate like price where there was the most transactions or the highest volume of transactions taking place. So this would be a major take profit for you on this trade. So what you're looking at is this to be the open, and you would be taking profit as soon as price hits the previous day points of control. So the PDPOC. Okay. So you can see here, as price got this acceptance, it triggered the trade. You could open the trade. You are taking profit straight away here. And then interestingly enough, what happens? Price comes back up into the area where this was triggered. And then that basically is like, you could almost compound that position then. So you've taken profit here, and then it gives you an opportunity just to add that back on again. It's like, well, price has come back up to this area. it's still valid. Like, it's still completely valid, this trade. It's still likely going to go the whole way down. So let's get back into it. And now let's ride it all the way down to the bottom. Okay. So just a really, really nice, good example that's happened today of how you can trade this. So finally, let me just add this onto here. So you would take profit at previous day point of control. Okay, so PDPOC, previous day point of control. I will just remember that, okay, because you'll have to, if you don't know these abbreviations, you're going to have to get used to them. This is what they are. Okay, you're not going to hear me like typing out everything. You're not going to see me typing out everything. Get used to these abbreviations. And then obviously what happens when you get down to the bottom is you close trade at previous day value area low. Okay, so here is the example. This is a very nice example, and I think that's basically just covered everything on this. The other thing you can do, like, you don't have to close this trade at previous day value area low. Like, as you can quite clearly see, market structure is still bearish. You don't really have a reason to close out of this, but at the very least, you're taking profit there. Yeah, you're taking another profit there, which is why this has got a bounce, because of people trading this today. You'd be taking profit at this, like 100%. So you're taking profit here. Again, you can see how it bounced. Have the opportunity to compound, then you take it all the way down to the bottom, take profit again at the lows, or if you would prefer, close out, wait for the next setup to be available to you. Okay, those are your options. At this point, you'd say, okay, if there's a change of market structure, you close out completely, or you could just trail your stop loss down, so you know that no matter what, you still won this trade. Like, it's still been a really nice trade. You've still, like, this has still been fine. So you could at this point just place a stop loss maybe above the previous day point of control. Price might bounce into it. It could continue downwards within this trend. Like, we're in a really strong downtrend for this day. So yeah, I hope that makes it kind of very clear to everyone. And this is just, I'm using the TradingView example of this because this has been like a really nice example of how this has worked and how anyone can set this up. So you can see here, the way that I have this set up is have my value area at 68%. Some people have it at 70. That would move our value area low down a little bit. But you can see that actually hasn't, the 68% has worked. Okay, worked really well. So know the settings that you like to use, stick with them, have it as 70%, have it as 68%. Start just doing this on all of your daily profiles and start to have a look at the way it works. Okay, now I'm going to show you one other thing. So this is another way that you can trade this. And this is using some software that you may never have seen before. Okay, this is a platform called Exo Charts. And again, if you know me and you see my videos before, you'll know that I do regularly use this platform in my day trading. Okay, so basically I just had to cut this video and start again just on this Exo Charts part. Sometimes with Exo, it has these weird little bugs on it where it will skew data on some days on some exchanges, and that's happened on the Bybit chart, which I normally use for my TPO. So what I've done, I did record everything, but I realized it wasn't really the best available information. So I have switched things over. I'm using the Binance chart here, which is giving us a nicer setup for this day. So this is just another way to look at the 80% setup. So if you do have Exo Charts, this is another way of looking at it. And this explains a little bit more of the theory here. So what you have here are these markers on the right-hand side here. So you can see here where it says PDVAH, previous day value area high, PDPOC, previous day point of control, and PDVAL, previous day value area low. You can see again, here is our daily open. So we have this daily open that is outside of the previous day value area. Then what we get is this acceptance back inside it. So you can see these candles closing inside right here earlier on today. And again, this sets up this trade. Now I don't have the ability to set up like a position on this, but just watch where my mouse is. You have the ability to set up this trade from when we get 1, 2 candles inside the previous day value area. and you would take your stop loss here at the high of the initial balance. So our initial balance being this blue shaded section, which is our first 2 candles, our first 1 hour of trading that took place within this day. And you can see how the markers react here with this move down. So on TPO here, let's just zoom in. If you are not aware of TPO charts, then I do have another video on this. So yeah, check that out. Have a look on my profile and check that out. Yeah, you can see here we have this move down into our previous day point of control, here being at $34,000. We had that bounce back into our previous day value area high. So move down, bounce into our previous day value area high. At that point, gives you the opportunity to compound. And then what happens? We come all the way down. Basically, like it front run it by about $50. It's fair enough. It's a long way down here, but into our previous day value area low. Now, obviously with this previous day value area low being at a big even, like 32,600, you wouldn't recommend like placing limit orders and looking to take profit on big evens. You're always going to front run that. So that's a pretty high probability why we did see this bounce beforehand on this TPO chart. Remember, on the trading view, it hit it fine. It hit it perfectly. But on here, not quite. Okay, so we did front run it slightly. So these are our marker settings, and this is what triggers the trade. So on Bybit, it was a little bit skewed. Our point of control and our value area were way down here because on that particular exchange, there was a lot of volume yesterday back at these lows, which ended up skewing the data for the rest of the day. Yeah, so we had some really like significant trading going on at the lows, which you sometimes see. So that kind of hopefully just explains like how you can use these markers just very simply. So you can just set these markers up on your chart every day using your exchange of choice. So obviously with Bybit today, not ideal, but if you trade on Binance, then that's pretty decent. Yeah. So it gave you a pretty decent trade. The other thing you can do is to look at the profile itself. So whereas I have my marker settings set very specifically on every day at 1 tick, so that's grouping only 50 cents worth of price action, and you can change these within these settings here. So you can see 1 tick, and up here you can see 1 tick, like you won't be able to see it, but 1 tick equals $0.5. Okay, so this is grouping just $0.5 and taking your volume based levels off of that. So that's what gives us these markers. Okay, hope that makes sense. But the other way that you can do this is by just trading purely a profile, and this you can change your tick size depending on what the volatility is and make it more of a visual thing. So I personally like to use 50 tick, which as you can see on the left hand side is grouping everything into $25 chunks of price. You could even do that as like 100 tick if you want like a really simple looking profile that just makes it nice and visual. You can still trade this. And what I would say is find a system that you like and that works for you and stick with it. So if you like to trade the TPO on its own, remove these markers from the right hand side and simply just trade the TPO. Yeah, so you could trade this very simply just off the TPO. We have our daily open that happens outside of the previous day value area, our previous day value area being the orange highlighted section. We then have the initial balance that's formed. We come in, we get this initial acceptance, but we do not close that second candle outside. We get the bounce, we come back down. Then what happens? We get the 1, 2 candle closes inside value area. That triggers the trade from here. So from 34,300, or you could even try and get back in at 34,450 with your stop loss above A at 35,100, a manual exit if we do start to close candles outside. So if this starts to change market structure, you can choose to manually exit it. Taking profit here at 33,900, the volume point of control of yesterday, and then eventually closing the trade down here, perfectly hit at 32,550. Okay, Oh, 32,600. Sorry. I was one a little bit below. So 32,600 or within that area. So what you would do with this is just do it off of each candle close. So you can see you come down, you're taking your profit on this candle, you get your bounce, you have the opportunity to compound if you want, you trade it down, and then you close out on this D candle once we get this confirmed move to the lows. Okay. So, head in the way again, as usual. Hopefully that explains it like nice and clearly for everyone. So we do have the 3 different ways of trading this. You have the option here of just simply, very simply, taking it off of your trading view fixed range tool, which you can use. Trading view fixed range tool, or you can take it off of your marker settings. So you see your marker settings on Exo here, or very simply taking it off of your TPO using your preferred tick size. So 50 tick, 100 tick, whatever the volatility of the day is kind of calling for. At the moment, to be honest, 100 ticks working quite nicely. That's a nice like visual kind of way of looking at this, splitting it into $50. Obviously less volatile days, you'll want to be lowering that tick size and doing it like that. So yeah, that's about everything on this video. Not the smoothest because we just had this price action today, but hopefully that makes sense to everyone. And yeah, I'll catch you all in the next one. Cheers.